Yo, what's up, guys? I'm not in Dubai. What's up, Cam Punk? How you doing, homie? Alright. I got a fucking low-cut shirt on for you guys today, man. You in for a fucking treat. What's up? How is everybody doing? I got my fucking deep low-cut shirt on for the boys. I'm exposing more of the neck than has ever been seen before. And, you know, it's all in hopes of a pump. Let's be honest. We want the number to go up. We want the number to go up. What's up, guys? Hope everyone's doing well. So we're waiting for Lomah to get his shit together and get on here. But what we'll do is we'll just start the stream as normal. And then when Lomah is ready to hop on, we'll get him in here, and we'll squeeze some alpha out of him, and then we'll kick him out. We'll send him on his way. Because at the end of the day, it's my stream, right? What's up, everyone in the chat? Whole lot of neck today. You're getting neck and chest, and you're seeing that I literally can't grow fucking chest hair for the life of me. 31 years old. Unbelievable. Okay. Hope everyone had a good weekend. Sunday, 3 p.m. here in my part of the world. So hope y'all had a good weekend. It's Father's Day here. So to all the fathers out there, happy Father's Day. I don't know where society would be without y'all. Probably wouldn't be one. So shout out to all the dads out there. And we're gonna get into another Ethereum and Chil with Trader Mayne and Lomah at some point to talk about the markets here. So as usual, these streams are sponsored by the homies over at Bybit. So shout out to the team at Bybit. We're still doing the same promotion at Bybit right now. So it is their deposit bash. Basically, all you got to do is make a deposit during the event period, which is until June 28th. So you've got about 8 more days to take advantage of this. It's free money. All you got to do is make a first-time deposit of any eligible asset. So I've left information in the description of the video about what assets are eligible. You just got to click the link, follow the instructions. It's super easy. And then there's tiered bonuses. So the more money that you deposit, the bigger bonus is the bigger is the bonus that you get. The bigger the bonus is that you get. English is hard. So register with the link in the description. It's like bybit.com/bonus bash slash like Trader Mayne, something like that. I've included the link in the description. You've got to hold the money on there until the end of the event. So you can't put money on there and then withdraw it immediately. You do have to leave the money on till June 28th, and then you get the free money after that. You get your bonus. So check it out. Bybit's been helping me out for months now, putting on these videos. So really appreciate them for doing that. If you got any questions about it, you can DM me, or you can just obviously click the link, reach out to Bybit directly. So use that link in the description. So with that out of the way, looking at the markets here, and unfortunately or fortunately, depends on how you want to view it, we're still in a range. So I wish I could, kind of come up here and, tell you that we're finally breaking out. It seemed like we might have been breaking out, but unfortunately we got rejected, top of the range again. And it is what it is, man. We continue to go sideways. So there's a few ways that you can kind of look at this situation. And it's totally up to you. Way number one is you watch Trader Mayne's last couple streams where I've gone into super deep detail about how to map out and trade a range successfully. And you can just milk the shit out of this, because that's what I've been doing. Those of you that have been watching me over the last couple of weeks, we have missed one trade. So I longed here, I longed here, I longed here, I shorted here, and I shorted here. The trade that I got wrong was this one here. So I'm not perfect, as much as I'd like to think that I am, and as much as my mom may tell me that I am. So we tried to take a long here. Basically, after we shorted here, right? We shorted this SFP. Everyone was bullish into resistance, same old song and dance. But I drew a mini range. So I said, okay, well, we've got a new range potentially here to here. And I want to see if this is finally going to break out, because basically my thesis for the trade was we've made some bullish market structure on the high time frame, right? So we put in a low, we put in a high, which was a higher high relative to here. We put in a higher low, and then boom, another higher high relative to this one and relative to this one. So I said, you know what? This might be how we actually break out of this range. So if you're in a range, right, I talk about longing down here, right, shorting up here. Then you have your midpoint, and we go back and forth. We go back and forth, right? But one of the things that I had been waiting for potentially is for us to actually break out of the range, because eventually the range does break. Really what a range is it's either accumulation or it's distribution. Price only does three things, okay? It either goes up, goes down, or goes sideways. That's it. There's no other scenario than up, down, or sideways. And however you want to label those is up to you. But price essentially has three main phases. Trending upwards, right? Trending downwards, or sideways. And the thing is sideways can be accumulation or it can be distribution. So let me just get a bigger black area here. We're going straight into the edumacating. So what we've got here is an uptrend. And then when the uptrend ends, price can go sideways. And then it's either going to break back up, and then this would be reaccumulation or accumulation, doesn't really matter. Or it's going, so if it did that, this is now accumulation. If it does this, this was obviously distribution, right? And we have a perfect example of this on Bitcoin here, okay? So we have price trending upwards, right? And then we have what? A range at the top, which ended up being distribution. And you can see that by the range breaking down, right? So people who were long here are distributing out of their long positions and potentially entering shorts, and then we break down. And then the inverse obviously would be a downtrend, right? that comes into a low, and then it either accumulates and then starts trending up, or it distributes and starts trending down. But that's it. That's all price can do. Up, down, sideways. And the sideways is either going to be accumulation for continuation of an uptrend, or the beginning of an uptrend would be reaccumulation. Accumulation would be the beginning of an uptrend, reaccumulation would be continuation of an uptrend, or distribution, which is the end of an uptrend and the beginning of a downtrend, or redistribution, which is a downtrend, sideways, continue the downtrend. Okay, but that's it. There's only 3 phases. So your job as a trader is to know when we are in one of those 3 phases. If we're in an uptrend, you need to be able to identify it. What makes an uptrend, and how do I trade within the uptrend? If we're in a downtrend, what makes a downtrend? How do I trade within the downtrend? And lastly, if we're in a period of either accumulation or distribution, A, how do I identify that? And B, how can I take advantage of it? If it's accumulation, because I think we're going to be going up still, then great. What do I want to be doing? If it's distribution, because we're going to be going down, what do I want to be doing, right? So does that make sense? Everyone's saying, can I remove the sub notification? Okay, hold on one sec here. I can do that. Okay, it should be gone. Sorry, guys. First of all, that Pepe has huge biceps. I don't know what you're talking about. Okay, so does what I just explained about, everyone's just telling me to get rid of the sub notification. I got rid of it. Does what I explained about those 3 phases of the market make sense to everyone? We're either in an uptrend, a downtrend, or we're in a range. And that range can be either accumulation, reaccumulation, distribution, or redistribution. Does that all make sense? Just checking the chat here. Someone in the chat, let me know if all that talking made sense. Okay, cool. Yeah, I am streaming on. I picked a category. My category should be crypto. Yeah, I am streaming on. My category should be crypto. See, why does it do this to me? Why does it gotta dog me like this? Okay, one sec here. I'm gonna make the. My category should. Twitch stream look better here. Give me one sec. Okay. There we go. Okay, done. I updated the stream info on Twitch. It should be better now. Sorry about that. Thanks for pointing that out, guys. That helps me out. Okay. So hopefully everything I just explained about those 3 phases in price makes sense to everyone. Okay. So essentially what we need to figure out right now is, are we in a period of accumulation, i.e. this downtrend is over, we're accumulating to continue up? That's the bull market scenario, right? Is that we are accumulating after a period of distribution. We had a down move, and now we need to reaccumulate to have an up move. You have to think about it logically, right? So there's so many different cliches, whatever the hell you want to call them, about what accumulation or distribution is, right? The longer the base, the higher the space, right? So the longer price base is, the bigger the move that comes after. And the way that you need to think about it is, okay, if I am a large player who is accumulating or distributing a large amount of Bitcoin, right, and helping make what this chart is, if we are going to go to 100K, so let's speak hypothetically. Let's assume that this is going to do this. This is accumulation here. It would make sense logically that we need to accumulate here for a significant amount of time to accumulate enough coins to shake out short positions, or I guess to bait short positions, because the other side of that trade is a long, and shake out longers who we do not want on the ride before actually making the move. So that is why this period that we're in here, this can last months. Like we could be like this all summer before going up, right? Because if we're gonna have a huge move to 100K or beyond, it will take a long ass time for the accumulation necessary to complete before we have that move. And if we're going back to 20K, right, you have to realize we distributed here for 3 months, right? We have 3 months here where we distributed. We've only been ranging here for a month. So regardless of what's going to happen, whether this breaks up or down, there's a good chance that this range lasts a lot longer. If the way that I think of it, and obviously I don't know 100% if this is true, right? I won't know if this is true until after the fact, right? You won't know if it was accumulation or distribution until it fucking moves, right? It's easy to be like, okay, that was obviously accumulation after it's broken out, or this was obviously distribution once we broke down, right? But to know in advance is difficult. But if we're going to go up, I suspect that this range lasts a lot longer, like months. Like I'm talking the rest of the summer. Maybe we dip up, maybe we run the high, maybe we run the low, but it's going to last a lot longer before going. The only way that I see this breaking out like immediately in the short term is actually if we break down. Because if we break down, the reason I think that would take less time is because this was distribution, obviously. So to redistribute after only moving from here to here, we don't need another 3 months of redistribution, right? So if this was the initial sell-off and this is redistribution, that could happen a lot faster. If this is accumulation and we are going to 100K and we're going to have like a 2013 double bubble kind of scenario where we have, a sideways period and then another run, I wouldn't be surprised if we're in a big range here until the fall. Wouldn't surprise me at all. So we are in a period of sideways. We're in one of those 3 market conditions, either uptrend, downtrend, or range. How you want to handle this is up to you. You can decide whether or not this is something you even want to trade. You don't have to. What you need to learn as a trader is what market conditions suit me the best. Some of you might prefer only trading in a trending market. Some of you might prefer trading only in a long market, so like a bull market. Some of you might like shorting. Some of you might love range trading. And some of you might not care. But at the end of the day, you need to be able to identify what kind of environment we're in. Are we trending up or down? And then, or are we in a range? And then you need to adjust your trading style to match whatever situation we're in, right? So right now we're in a range. If you're trying to get into swing longs and swing shorts within this range, you're going to get owned, right? Because the moves are not going to give you, you're not going to get that big continuation long that you would in an uptrend environment. And you're not going to get that short that just keeps on selling off in a downtrending environment. You're going to get shorter moves within a range-bound environment. And so you have to change how you're trading. You have to change how you look at the market. You have to be more strict and diligent with your take profits, right? If we're coming into the range lows and you're short, you need to be looking for reasons to close that short. It doesn't mean that we can't break down. You could have caught this short and maybe this was the one where we eat a dick, but you don't know. So you need to be looking for reasons to take profit, or at least, trailing your stop along the way so you don't short here, right? And you're like, you go to bed yesterday being like, I'm a god, and you wake up to like a 10% move in the other direction and you're like, what the hell? Right? Well, we moved into the lower part of the range and into support. So does everything I'm saying here make sense? And also, you don't have to fucking trade this, right? I sent a tweet out the other day and I'm like, if you are getting chopped up here, because you see everyone on Twitter, they're calling this chop. I disagree. I guess it depends on what you define as chop. Like, to me, chop is like literally untradeable price action. Chop is like this. This was like fucking chop. And even this was tradable though. And it was. But this is fucked, right? Like, there are periods where it's hard to trade. But to me, this is not chop. This is a range. And what it's telling you is a bunch of people keep longing the range low and expecting us to just do this. And then when it pulls back at the range high, they go, what the hell? This chop is untradeable. When in reality, they're trying to trade in a trending environment, or they're trying to trade in a ranging environment like they would in a trending environment, and they are getting chopped up. I don't think this is untradeable. I think this is very tradable. I think I've demonstrated over the last month that this is extremely tradable, and I've given you the tools to do so as well. But at the end of the day, you need to know what you like to do, how you like to trade, and you need to be okay with not trading. If this is something that is fucking you up and you're blowing a bunch of money trying to leverage trade within this range and you're getting destroyed, don't. You don't have to. When we break out, you will know, and it will be obvious. Once we restart into a trending environment again, it will be obvious, and you do not need to trade in the meantime. You can wait. Whether that's to the upside or to the downside, we don't know yet. But when it starts trending, then get back involved. The last thing you want to do is sit here and waste all of your money trying to trade this when you're getting destroyed. And then when we finally do start trending, you're now either too broke or too scared to get back involved because of all the money you lost in the last kind of couple months or couple weeks trying to trade this chop. So to me, we're still in a range and you need to treat it as such. So we've been working with this same range for a long ass time, right? So I'm just going to delete a couple lines here. We've been in this range for an entire month now. Now, what I'll show you here is each long that has played out so far has happened in our where. It's in our sweet spot in the lower part of the range, which is where I like to get long, right? So we had our first long, our second long, our third long, and potentially our fourth long forming all within the lower part of the range. Now, if you want to go watch my previous videos as to why we got long here, it's not just because we hit the 0.79, right? We're looking for bullish price action, clues, things like that. What the range does for us is it gives us a place to look, right? When you're in an uptrend, it's easy. You're longing, right? We're longing here. You're longing support and you're putting your stop just below and you're riding it. In a range, it can be a little tricky. So using the range concepts that I've been sharing with you guys for the last couple of sessions, it gives you a framework of, you know how to get long. You're like, okay, Trader Mayne, my long setup is, something like this, right? It's a break-in market structure and then I buy the retest. Great. Where do you look for this? Knowing how to get in the trade is one part of the puzzle. Knowing where to look for your setup is another part. And knowing where your setup is going to be most likely to play out is another piece of the puzzle. If you're looking for your long setup up here, that's no bueno, right? But if you're looking for your long setup down here or down here, now you're looking in the areas where it's higher probability that you're going to be right. And that's all that trading is, right? It's making an educated guess based on all of your technical analysis, your confluences, blah, blah, blah. Boom, put it all together. You now have an edge, hopefully, in terms of where I'm looking to get involved, and I might have a outsized chance against the market to get into a trade that's actually going to work. So all this does is give you the framework of where to look for those longs. And if on the reverse, every short that is played out in the last month has happened where? In the upper part of our range, right within our golden pocket. This is the only instance where it went beyond it, but still gave us a swing failure pattern into the upper 1/3 of the range. And again, I'm not just shorting as soon as we hit the 7-9. I'm looking for bearishness. My bearish setup is, a breakdown and a retest. That's my setup. Okay. Well, I want to look for that up here, not down here, right? So I've given you guys this like step by step in the last 2 streams, and then this one, and then I've done 2 where I've played video games and just kind of chatted shit. I've given you kind of an entire framework in terms of how you can trade this type of an environment and not get chopped up. And that might mean that you're not in a trade every day. That might mean that you have to wait to here, to here, to here, to here, and here, here, and here. I mean, to me, in the last month, there's been 8 really, really good trading opportunities. Has there been trades in between? Of course, but there's been 8 super high probability ones. To me, that's awesome because A, super high probability, they're based on the high time frame, and B, there's only 8 times when I really had to be locked into the market in the last month, as opposed to being like on screen. The problem with the bull run, and the bull run is great, is like you are locked the fuck in the entire time, right? Because every day price is going up or down 10, 15%. There's periods of time, where when we're in this range, if we're not down here or up here, you don't have to do shit. Set your alerts and chill. So I've given you the framework to do this, right? Now all you need is practice, because I've showed you literally in these last couple of streams an entire strategy that you can build to trade in these types of environments. But now you got to get the reps in, because no matter how many times I show it to you, how much I handhold you, drawing the range on my chart, that's one thing. You doing it in your own chart, that's when the real kind of, click in your brain will happen. All right, we've got Lomah joining up. Hold on one sec here. Oh. Yo, what's up, dude?
Okay.
All right, guys, we got Lomah here. Now you guys can all you fuckers can start liking the video. What the hell is going on? We got 600 viewers and we don't got 600 likes. This is bullshit.
Exactly. What's up, boys? Thanks for having me, Mayne. Let me retweet this actually on my Twitter. Get you some.
We got to get Lomah to retweet it because his engagement's better than mine. It's unbelievable. It's unbelievable. These people don't
How
know.
that shit is, bro.
You guys don't know. I actually have new sounds on my soundboard. You hear that? That fucking gorilla? We got this. It's the best investment I've ever made. What the hell? I fucking thought I muted that alert box, didn't I? Oh, it's because we're not on live. Okay. Cool. So what we're talking about here, Lomah, and we can get your input as well. And you guys can hear me, right? Someone in the chat tell me you can hear Lomah. Is we're in a range. I think it's pretty obvious. Pretty much everyone is aware that we're in a range at this point. But I've just been kind of talking to these guys that they've got to be able to identify where their edge is, whether that's in a trending market or it's in a range bound market. First, you got to be able to identify where we are, right? Are we trending up or down, or are we going sideways? And then you've got to change how you trade to be in line with the type of market that we're in. And I think a lot of people who are saying we're getting chopped up, this is chop, is because they're trying to trade like we're trending when we're not. And when we're not trending, when we're going sideways, you need to change a few things about how you trade, whether that means being more diligent and quick with your take profits, not taking as many trades, only looking for trades at the range highs and the range lows, and ignoring kind of the noise in between. So I've been following you obviously on Twitter, and I know you've taken a couple longs off the lows. What are your thoughts kind of on, trading in the range and what you've been doing to kind of, manage the, going from the mega uptrend to where we are now?
Yeah, I mean that's a great point. Like everything that you said just now, I pretty much agree with. But all right, so if you're trading this and you're not, if you're used to, the trend that we've had in the last couple months where things just basically go up all the time, and no matter where you long, you're gonna get bailed out by the market. You're gonna have a hard time adjusting this quickly to a new market condition, right? And a lot of times what I'll see, like the main problem that people will have is that not only will they not adapt their trading condition or their trading strategies to fit the new market conditions, they'll actually keep the same amount of risk. So
Mm.
as in like in a bull market, you're obviously going to get rewarded for betting more, right? Which is where that meme comes in, like bet more, what if, right? All those, it's ape season, whatever, just
Hold on. I've got a sound for this. Let's go.
but yeah, like exactly. It's like people just, they've been rewarded for bad habits for the last God knows how long, like a year basically, right?
Yeah.
And it's really hard to break habits once they formed, yet alone when you've been rewarded for them, right? It's easier to like say, quit fucking drinking if you feel like shit. But
Yeah.
this is like you're drinking, but you feel great and you're getting paid for it, and everyone's praising you for being a goddamn, you know,
A, a
insanely good
bull in a
drink.
bull market.
Exactly, right? You're a genius, everybody loves you, and it's hard to, step away from that identity that you've made. But yeah, one big thing if you're trading this and you're getting fucked, first thing, lower your risk until you're able to adapt to whatever the market condition is, right? It could be range, it could be chop, it could be trending. Trending tends to be, everyone's preferred choice, obviously, because it's very obvious which direction price is going, and it's very easy to take a trade. You pretty much just long or short depending on the direction of the trend. But when it's ranging like it is right now, and if you're only used to trading trends, I would actually recommend you to jump onto lower time frames
Mm-hmm.
because what is range bound in a high time frame, like say on the daily, it looks like we're just stuck in this bottom basing range where it's not really chopping that hard, but it's stuck in a range for sure. You can actually go on like the 5 minute and you'll see that price actually trends on lower time frames.
I'm going to give everyone a visual of this
Yes,
because this
go on
is
the
a
five
great
minute.
point. And
Yeah.
this is something that I've talked about, right, guys? We talk about price being fractal. And what's true on one time frame, really it's just the sum of the lower time frames. And so if you're in a big range like this, I talk about this all the time because you guys will ask me, you'll say, okay, well, we're in a daily a daily uptrend. Well, within a daily uptrend, there are periods of down, right? It doesn't just go up in a straight line. There's pullbacks. What is that pullback? Well, on the daily, it might be one candle. But on the 5 minute, you've got an entire downtrend.
Yeah.
Within that daily structure, that is now something that you can say, okay, actually, this is a 5 minute downtrend. And if that's a great point, like if you're a trend trader, identify what part of the range we're in. Let's say we're at the range low. Well, okay, there's probably a high probability that the next move is towards the range high. So rather than just stare at the daily and see, four daily candles move towards the range high, you can go on the low time frame and find multiple uptrends on the way and downtrends on the way to that range high. And then, yeah, you're back in a trending environment, but you do have to keep in mind, obviously, the high time frame is ranging. So as we approach that range high, If you're just longing, get ready to potentially look for signs of reversal. And do realize that the high time frame still takes precedent, right? So if we're in a daily uptrend, if you're trying to play a 5 minute downtrend, realize that you're counter trend on the high time frame. So my advice would be, if we're in a daily uptrend, wait for that down leg to stop and then play that low time frame up trend, which ends up being the next kind of higher time frame leg.
Yeah, no, that's exactly it. Like you're able to just, different time frames should give you different outlooks on the market, and you guys can use that to your advantage, right? And then slowly, as you adapt to the new whatever the market condition is, whether it's range or a new trend or if it's straight chop, which is okay. The thing with chop, I know people use chop and range pretty like
Interchangeably. I just
yeah,
ranted
like
about this, so I want to hear what you have to say.
okay, okay, well, we're about to rant about it one more time, but it's like chop is kind of like when price is in a very tight knit range, okay, where price is kind of like say if it's in like a 5% range, right? And it's just up, down, up, down, up, down. There's no real rhythm or anything to it. It's just up and then down, up and then down, up and then down. That's probably what chop is. When you have range, it's more like, all right, we're going to the top of the range, and then there might be some chop on lower time frames before it heads down to like the mid
The
range or the
example I gave was the September 2018 to November, is right before the 6K floor broke. You remember that? We had like
is that the
literally,
one where we just sat in
yeah, it was like a
like
5%
5%? Yeah,
range
exactly.
for a
That's
month.
exactly what I was thinking. Yes,
Yeah, that's
that's
exactly what I said. I was like, that is chop. And
yeah,
I mean, it's
that's
still
tough.
technically a range, but like that's hard to fucking trade. Like if you think what we're trading with now, I think, and the way I kind of explained it is like, I think it's a cop out to just call it chop. Maybe you're just trying to swing trade in a range and you keep getting destroyed because your take profits are way too high and your stops are, way too loose. And every time we get to the range high and we jack, you're like, oh, this is unbearable chop. And I'm like, dude, looking at this on the 12 hour, like it's clean as fuck. Like
Yeah,
there just hasn't been as many trades. Like to me, there's been like 7 or 8 really obvious trades, like 4 on the long side, well, assuming this long might work out, and 4 on the short side. And otherwise, you can just chill. Like if you don't want to get down on the low time frames, you don't have to. And the way I've kind of been explaining it to these guys is, if you learn to first identify that we're in a range early, now you have a framework where, okay, I only need to look for longs in the upper part of or in the lower part of the range, and I only need to look for shorts in the upper part of the range, and anything in between, I'm chilling.
yeah,
And I think a lot of people struggle with that, especially when we come from a market where the last year, every day there was something pumping double digit percentages to the upside. And you feel like there's an abundance of opportunity.
yeah,
Now is a great time to either take some time off or just realize that you don't have to always be in a trade, right? Like, especially when we're uncertain of where the macro direction is going, whether it be up or down, you don't need to take some high conviction long being like, all right, this is the one that's going to 50K. Target the range high again. And until
yeah.
you're proven otherwise, until the market tells you, no, we're breaking out now, you just kind of continue to play the game.
Yeah. So what's happening for a lot of people who, say you're a swing trader or a long-term trader, like an investor or something like that. You're better off, if you really believe, like you're trading 2 years, 3 years from now, or even a couple months from now, right? It doesn't really make sense to get too involved in the market when it's, like when it hasn't really established a trend. Okay, like you can afford to miss the first 15% of a move if you're a swing trader, because when things really start to trend, you're going to see Bitcoin do, its usual like 200%
Mm-hmm.
and alts do their, 2000%, whatever it is. But the problem with swing trading is that you're forcing essentially like a square into a circle, like it's just not meant to be right now, certain market conditions just are not friendly towards different strategies, and the sooner you realize that, the quicker you are to be like, all right, well, I don't really need to trade this, it's not the best opportunities for me, It doesn't give me the highest probability of success. And if that's the case, why the fuck are you trading it? Like
Hmm.
your goal as a trader should be to make money, right? And ideally, the money is to give you freedom, uh, time basically, right? Like time to do whatever the fuck you want to do.
Hmm.
If the rewards are suddenly not as good as it could be because the market conditions suck, a smart trader would be like, yo, I don't need to fucking trade this because look, if for example, if you're working a job and your going rate is $50 an hour and someone else says, hey, you know what, I'm gonna pay you $10 an hour, like would you fucking do that job? No, you fucking wouldn't. So if the market's giving you less returns than you're, usually used to in a prime market condition, why the fuck would you trade it the same way that you would trade, when the markets are going off in your favor? um
No, I completely agree. And I think one of the hardest things, especially for a lot of people that are new, is trading is very addictive. Like, especially if you got involved in the last year where it's been like, and I mean, listen, I got friends who are posting on Instagram, that they're making all this money trading, whether it's options, crypto, or whatever. And like, that's how I knew the end was near, or at least the temporary top, hopefully temporary top was near. Because I'm like, I've got people who don't know shit about trading making money very easily. And I get it. You're pressing buttons and now you have more money. And then you press more buttons and then you have more money. And I think a lot of people confuse skill with being in the market at the right time. And when it becomes more difficult, like I've had a great time trading this last month, but if all you know is up only, you're like, what the hell is going on? Why aren't we just going higher? Every time you long it and it starts moving away, you're like, all right, this is the one. And then it just comes all the way back down. So I can understand that like a lot of people are struggling right now, but I think it's a good learning lesson being like, listen, like the market conditions have changed. Maybe I don't need to be in a trade right now or as many trades.
yeah.
And I think there's this addiction that comes with trading, a lot like gambling. Unfortunately, there's so many similarities between the two. Where you want to always be in a trade, you want to always be in a position, you always want to be making money because you're chasing the dragon, right? You're like, oh well, a few months ago I just kept longing altcoins and they kept going up and I kept making more money, and all of a sudden the market is now turned around. You keep longing and shit isn't just going up. And then when Bitcoin dumps, altcoins are getting destroyed even harder. I think one of the rudest awakenings that we're going to see for people, let's assume hypothetically, God forbid, that Bitcoin goes back to 20K. Like, let's say that this is just redistribution and we're going to take another leg down, which is just as likely as going back up, in my opinion, unfortunately. Like, I don't think
Well,
there's any way to tell, like, oh, this is for sure breaking up or for sure breaking down. I think
yeah.
that's just like a Twitter clout thing where you're like, oh, I called it. It's like, I don't
Yeah.
think anyone knows for sure. Let's assume we go back to 20K. Lomah's been around long enough. Many of you have not. If this goes back to 20K, you guys are going to be shocked at how much further your altcoins can go down. Like people are
Yes.
like, oh, my soul is already down 80% off the high. It's like, yeah, guess what? It can go down 80% more from here. Like there's this common thing, and I see on Twitter all the time where people will be like, well, obviously longing is better because long has infinite upside. And to an extent, that's true, right? Like you can open a long and technically Bitcoin can go to $1 million. The worst case scenario is you open a short here and it goes to zero. But that's assuming you only open one position, right, in each direction. If anyone was around in the last bear market, you can short, right? Close your short and then re-short, and it can drop another 80%. Like these things, you can splice and atom in
Mhm.
almost an infinite amount of times, right? Like going from $1,000 to zero is 100% drop. Going from $1 to zero is also 100% drop. So people don't realize that their altcoin can keep getting cut in half in value over and over and over again until it's down like 99% from all-time high, but it's also down 99% from like a year ago, right? Or from like 6 months ago. And then it can stay down there for literally years. So I do like, I don't want that to happen. I obviously want us to go back up, but I don't think a lot of people A, understand, or B, have um, any sort of preparation in terms of like, okay, like what, like you want a dollar cost average into something. Well, what if this thing has another 50% to drop, right?
Yes.
So I think things can hopefully go back up. I hope that this is 2013, and I'd love to hear your thoughts on that. Like, I hope this is like the 2013 double bubble where maybe we just go sideways for the next 3 months. Maybe we run lower, hit 25K or something, but this range ends up being the base. And then we go to 100K in the fall and into Christmas. I hope that happens, because if not, I don't know.
Yeah.
If this was the top of the bull run, every bull run we've pulled back 85% plus, and that puts us like damn near 10K. So would love to hear your thoughts on that.
Yeah, so I'll start with the alts part because I feel like a lot of people are very I don't want to say naive, but naive, you know, like when you first join, right? You get sold a lot of dreams and you're definitely a buyer, right? Like you just hear all these things, these new technology breakouts, these updates, these main nets, how it's going to change the world, the value that it's going to bring, how it's going to, you know, change the way alts are viewed and blah 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 blah, like everything under the sun, okay? And if you've been around, you'll remember things like Icon, which is under
Of course.
ICX, or like the interoperability, Walton chain, V chain, stuff like that, right? Quality projects with a legitimate team, blah 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 blah. They all went like 99% down, and the talk that people had when it went like 60% down from the highs feels eerily similar to how people are reacting right now, where
I
it's
know.
like, yo, you guys are gonna fucking stay poor, you dumbass traders. Like you guys aren't buying this when it's 80% down. Come on now, you know, like blah 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 blah. And guess what? It went down another 80% from that point, or it went down another 50% from that point. And people saw their life savings disappear. They, you know, they got bitter with the market. They hated alts. Everything was a scam. Some of them never returned to the markets, you know.
Someone just said dragon chain. Let's take a look at the dragon chain chart here, guys.
Like,
This
and they all look very
Yeah,
similar.
this chart is called "Your Money Is Gone Forever, Bro." I'm sorry.
Yes. Like, yeah, to pull up the Dragon Chain chart and pull up the ICX chart, they all look the same. Like, they all look the same, where, you know, people had insane amounts of money at one point, and then they kept buying every dip until, well, you know, it pretty much went 99% down.
Till it just kept dipping.
And maybe this time's different, and all your alts, you know, fly and they make new all-time highs, and everybody's gonna make it. But as traders, you guys are trading probabilities, right? No one really knows for certain. There's never like 100% guaranteed trade. Maybe some rare exceptions, but that's like a heavy, like you have to have some insider information or some shit, okay?
Yeah.
But for the most part, we don't know what's going to happen. And you take the best, you know, tools that you have, whether that's some indicator, some type of analysis to, you know, stack your deck to make it more favorable for you. And if you look at those charts, what is that telling you about, you know, these new altcoins that are, you know, promising to change the world and whatnot, right? Like, it's probably one, not going to happen. Okay. There might be a few down the line that become, you know, your Amazons, your Googles, your Teslas, whatever. But it's foolish to take that bet without some type of real concrete evidence that, you know, like it's gonna do what it says. Because I mean, every alt promises to change the world. Okay, like your alt, his alt, her alt, your favorite influencers alts. Okay, everyone promises that their alt's different. Okay, and that's how I know they're all the fucking same.
Yeah.
Like it's all a game here. Okay, it's all fucking musical chairs. If you're a trader, you know, maybe if you're like a 10-year down the line kind of guy, you can get into certain alts and pray. But for the most part, look into the past to kind of look at you know, the reality of what actually happens in a bear market for some of these very popular alts. Like Dragon Chain was very popular. It wasn't like
Everyone was shilling Dragon Chain.
yeah.
And I think you've brought, first of all, guys, are you listening to the language he uses? It's almost like he's very smart, just like me, saying all the exact same things, right? Like, we're traders. What we do is we make educated guesses, right? We have tools that stack the deck in our favor, whether that's your TA, your indicators, whatever you use, and then you're making a a calculated bet at a level that something might happen, and it's risk adjusted, and hopefully with your skills in TA and whatever else, the odds are slightly in your favor, but you never know, right? The most common question I get, or one of the most common question I get is, look at this altcoin. One of the most common questions I get though is, how did you know we were going to bounce from that level? Right? And you don't. And as much as there's people on Twitter who are always going to be like, oh, like, of course we bounce from here, like, because XYZ, it's like, you don't know until it happens. Like, everything is hindsight. When you're doing it live, it's a calculated guess, right? It's, okay, I have X, Y, and Z lining up. Therefore, I'm willing to take a long or a short based on all of these factors. And then you put your money behind it, and then you wait. And hopefully you're right. But you're not going to be right every time. I don't know that this level is going to hold. I don't know. I don't know until after it's happened. No different than when we leave this range, no matter what anyone tells you, we will not know if it was reaccumulation for continuation of the bull market or redistribution for another leg down until after it's already happened. Right? So you don't fucking know. And I think a lot of people, I agree with everything you said about altcoins, is the perfect example, guys, and I have nothing against Link, I have nothing against XRP, I have nothing against any of these coins. But when you have these communities that build behind these coins, you can just tell how invested these people are in the success of that coin. They have to be. Because if it doesn't go back up to where they bought it, because they probably didn't buy the bottom, they're fucked because they don't know how to trade, right? They're an investor and they're hoping that their bet turns out to be the Apple or the Facebook of the internet era. People don't want to talk about the other 1,000 companies from the internet bubble that are all gone, right? No one wants to talk about those. They only want to talk about the ones that survived, right? But the likelihood of you throwing the dart and picking the right one, a lot of these companies had really sweet fundamentals back in the year 2000. Right? All of them were the next Google, but only Google ended up being Google, right? And the chances of you hitting it, maybe you fucking do, and that's awesome, and you got in super fucking early. But I'm a trader. I make no qualms about that, and I tell everyone, like, trading and investing is very different. I think trading, I have no bias. I don't care what the coin is. I long shit that looks bullish. I like to short shit or not be in shit that looks bearish. And I think a lot of people need to have very honest conversations with themselves, looking at their altcoin portfolio, realizing that we're in a very precarious spot in the market where if we do break down, I don't care what your alt is. I don't care if it's the alt that is going to end up changing the world. If Bitcoin goes down to 15K, your alt is fucked. And if you don't have the ability to save yourself some money and some heartache and some stress by being like, okay, this thing looks shitty, it's in a downtrend, I need to sell, you're going to become a community member and a bag holder. And who knows how long that will last. Maybe it will go back up past where you bought it in the next bull run. But to me, there's such major opportunity cost in holding something all the way down and then just hoping, because that's what you're doing, that in the next bull run, it does pump again and it pumps beyond where you bought it. When in reality, you could have sold it. Maybe it drops 30% off the high and you're like, okay, we're entering a bear market. You sell. And then when it goes down 80, 90%, and then Bitcoin starts looking bullish again, and all the factors that we had a year ago where it's like, okay, we're entering a bull run, get back in. Right? Like, who cares what your original entry price is? It's about making money. Like, as much as I'm in it for the tech and I want to see crypto take over the world, I'm in it for the money. I don't know about you. I'm in it for the fucking money. And if I can do anything to avoid that, losing money or holding a position in massive drawdown, I'm going to. And I think a lot of people are going to be in a big shock, if alts if we don't continue this bull run, how bad alts are going to fucking rip. So let's do you mind sharing your screen? I'd love to see kind of what your thoughts are on Bitcoin and kind of where we're at. I mean, to quickly summarize for guys in the chat, I'll let you pull it up before I pull it over here. Here, can I ask you to share? I'll make you the host. I think that's what you need to do.
Oh, yeah.
So as you guys see, we're still in this big range. What I've done here, guys, is within this larger range, I've actually identified a smaller range. So if you want to get rid of this big range here, guys, you can now focus on this smaller range. The way that we trade it is the exact same, right? we're looking for longs down here. We just had one get tagged this morning. So if this is going to play out, awesome. And then as we get back to the range high, we're going to be looking for reasons to get out of our longs and potentially get into shorts. You're not just blindly shorting the range high or the range low, right? You're waiting for a signal. This is your area where you're looking for weakness. This is your area where you're looking for strength. You don't just market long. That's how I trade, at least. Looking at Bitcoin real quick here, we ran this daily low, and it looks like we have an hour left, but it looks like we're going to close as a nice daily swing failure pattern, a big hammer candle right into that order block there. So to me, I'm looking at this and I'm saying, okay, if we can break up here, the next pullback is a long. So if you miss the long here, if we're able to break up, you can long the next pullback into where? The range highs. And that's where we'll look to take profit, at least on some of the position, and potentially get into the reverse. So we're in a range. As much as people on Twitter, everyone on Twitter, all the charlatans, whatever the fuck you want to call them, have been telling you that 33K is the bottom and you better long it or else you're going to miss the next leg in the bull run. Well, you've had 4 opportunities now, so that makes me think it's probably not the bottom because you don't get that many chances to do it. And even if it is, right, like we're just in a range and the carousel is going to continue. Most of Twitter is going to get bearish like they were yesterday, like they were a week ago, like they were 2 weeks ago when we're at the bottom, and they're going to get bullish again right into the range highs. So just keep trading the range, guys. Don't overthink it and ignore people who are telling you to buy alts right now, who are telling you that, hey, the bull market is absolutely not over. I know some very smart traders who are like, the bull run is absolutely still on, and I'm not disagreeing with them. I would like to think the bull run is still on, but I'm a trader. I'm not a hopium dealer. I'm not in the, I don't care if this was the absolute low that we just put in before we go to 100K, I have no problem longing this at like 45,000 or something or higher when I'm very confident that the low is in, as opposed to just potentially another low before another move back into the range. So I would chill out, and just this is a great time to sharpen your skills, guys, as well as to prune your fucking Twitter following. And like, I know I'm an influencer and Lomah's an influencer because we got all these followers. Like, at the end of the day, there's a bunch, to me, it's super obvious on Twitter who's just there for the engagement and who's there because they actually trade. And the ones who tell you to long altcoins for the last like 2 months straight as they've, 75% decreased in value, they're going to tell you to keep longing shit all the way down. And
they fucking hate you. Trust me.
Yeah, and guess what? They don't give a shit about you. They don't give a shit about your money, right? So rather than hope that these people have your best interest in mind, I have your best interest in mind, but guess what? I care about my money more than I care about yours. Like, as much as I want to help you guys and show you guys stuff, the entire goal of these streams and what I post on Twitter and YouTube is to give you guys the skills to make your own decisions. And maybe I enter along and you disagree with it. Fucking awesome. Trust your own analysis. This is the best time in the world where if you're serious about being a trader, to take time and focus on your charts and the skills you need to make your own decisions. Because then when the next trend happens, you're going to be fucking ready to go. So I'm going to pass off the screen to Lomah here. Give me 1 sec.
Yeah. Double check if I'm sharing the right screen because I'm pretty sure I am, but don't want to be sharing like my fucking Discord or something.
No, it is your
Just be a
trading view.
Yeah, cool.
All right, guys. So you should be able to see Lomah's screen now. Someone in the chat, God, this white background makes me look paler than I already am. I didn't think that was possible. So I'm just seeing some guys in the chat here real quick. Okay, so I see Kaleo getting mentioned a few times here. First of all, guys, I don't know if you remember, all of you must have a short memory, but Kaleo was running the bull market and making millions of dollars for the last like 4 months before we dropped. So I'm pretty sure Kaleo is fine and totally knows what he's doing. So I think people I saw someone like made a thread this morning where they're like, oh, look, Kaleo tweeted and then that price is going to go up and it's going to go down. And then it went down. Like, that's the biggest bullshit kind of tweet in the world because there's so many more instances of him tweeting that it's going to go up and then it did, and him make millions of dollars on that happening. Like, of course he doesn't get it right every time. None of us do. It's very easy to go in hindsight and cherry pick someone's bad calls. And it's especially telling when the person doing the cherry picking is only doing it after we've broken down like 50 fucking percent, and a month ago was like sucking Kaleo off when he was like nailing every long. So just be very careful what you see on Twitter. Just like there's hopium dealers, there's people who are posting shit. This is what makes me worried that we're entering a bear market, is the amount of fucking gotchas that are going on Twitter. Everyone's trying to expose other people and shit on other people, and I'm like, these are bear market vibes, man. For those of you that were around in 2018, it was the paid group thing. Like every paid group was trying to expose other paid groups. So I don't know, man. We'll see. I hope it's not the end, but yeah, I have mad respect for Kaleo, and I think Kaleo is a great trader. People seem to forget that he like publicly longed 3,000 Bitcoin, calling for like 60K like a year and a half ago. But anyways,
Yeah. Yeah, guy's crazy, man. But all right, so onto this chart. So we're on the Bitcoin chart. I'm gonna start on the weekly. I assume you're just looking for my take on Bitcoin, so
yeah,
I'm gonna do that.
if it's different than mine, I'm shutting the stream down just so
Yeah, make sure you just mute me, and then just pull up your screen. All right. So, all right, we'll start on the weekly. I just quickly drew out like the range high, range low on the weekly. Um, and you'll notice that we're in a really fat range, like a 35% range, basically, right? And what really convinces me that we might not have formed the bottom is because we quickly traded above the top this week, where supply was just insane, and we dumped all the way down to 33, I think, like yesterday or some shit. That just tells me that the market's just not ready to move through this 41K area yet. Um, will that change? Maybe, but for now, this rejection on the weekly, and I think it's most likely going to close this way.
we've got 53 minutes to save it.
Yeah, like I mean, I'm not going to rule out the possibility that like Elon doesn't put a monstrous tweet out in the next 40 minutes, but it most likely closes like this. Okay. And usually like this, you're going to see some type of push downwards from here. Uh, I think under 30K would be a really good buy, which is just taking the lows of this dump. But this is on a weekly time frame. And most of you guys, I know for a fact, are not trading on weekly time frames because you guys have the patience of a goldfish. So I'm going to hop down to the daily. And this is mainly where I trade and mainly where I mark out levels that I like. I was kind of late to the stream, so I didn't catch Mayne's analysis. So I'm just going to go ahead and give you my take. But all right, so I like, or I'm favoring longs here. Why? So this was the start of the up move, right? So you'll see that this low formed, and then you see this monstrous up move towards the range high, right? That wicked above it right here. I don't know if you guys can see very clearly on the YouTube videos, but I'm gonna try and zoom in as much as I can. So this is what I'm talking about right here, where we just kind of wicked it on lower time frames. You can call it deviation, SFP, you can call it whatever you want. But basically, we traded above this area. Sellers sold the shit out of it, and now we kind of just SFP'd the bottom of the low before the move up. That to me, this is usually always a buy signal. Like on a high enough time frame, this is almost always a buy signal. The reason for that is essentially price is just reverting its entire move up, right? So the market has just completely deleted all the value that might have came from whatever Sailor was doing with this 500 million buys. The thing is that Sailor didn't sell it either. Like he actually bought 500 million if we take him for his word. So that hasn't really changed. To me, when it wicks the lows and people buy into it like this, there's buying interest here, and it probably just moves towards, maybe like right here or something, like 39K, 38,000 or something. But you shouldn't really look to short here. Like this probably isn't your best time to look for shorts. Okay. If you're looking for shorts, you're fucking looking up here. Okay. And I know that sounds so counterintuitive because, as price is moving up, everyone on Twitter is very bullish, and if you sell or you're shorting, you're pretty much a fucking idiot, right? Like everyone's gonna tell you, oh, you're not gonna make it. Have fun staying poor. Maybe you'll get memed if you're wrong, right? But if you're looking for shorts or you're looking to get out of longs, this is actually where you want to do it. Like when, it just so happens that people tend to be really bullish into resistance. It's not always the case, but if you're looking for shorts, weird, like this is not where you want to short, like this is just not the kind of price action that screams, yo, let me sell a bunch of Bitcoin. This is the price action that you want if you're going to sell it, like that. Okay. So like right here. Okay, where like we just keep closing below the lows. The market just doesn't give a fuck about Bitcoin and Sailor buying $500 million worth. That's when you start, considering that, yo, I might want to short support, but until then, support is support. Whether you think the bull market is over, or you think the bear market is not even real, it doesn't happen, whatever, you just, as a trader, you look at resistance, you look at support, and you should have an idea of what you should do and what you shouldn't be fucking doing. All right. And what you shouldn't be fucking doing is shorting this first test of the Sailor announcement. Okay. Especially when it wicks the lows like this. When it wicks the lows like this and it's on a daily candle, that just tells me that fucking people got liquidated. As in, people bought into the Sailor thing. They put their stop losses right below, which makes complete sense to me, I guess. And price comes back down there, and people are like, yo, I don't want to take a loss. I'm going to close my trades at break even. Or maybe you just have a stop loss there because you're going to sleep, right? And you can't manage the trade, whatever reason. And they get stopped out. Maybe they get liquidated, whatever. And you get this little gnarly wick that just gets instantly bought up. That's your buy signal. Okay. Like, does it always work out? No. But you just have to be able to conceptualize certain things in the market and apply that to your trading strategy. So for me right here on the daily, this screams long. Um, yeah. So with that, I would probably look for a move to the range high. I'm not going to assume that this is like a trending move, right? Because we don't have evidence of that. Like if price does this where it goes up to like 44K and then it retests 41 or something, then we can start talking about, yo, we broke out of this range. It's time for us to either move to the next range or for us to, start our next trending move, right? But the problem is we don't have that evidence yet. So you're calling for something that you have no evidence of, that doesn't exist, and that you don't really have any analysis or facts to support that trade. So for me personally, I'm looking for a move back up to the range highs, maybe 38, 39,000, 40,000 if we're lucky. And then I'll reassess from there, right? Like as a trader, that's what you should get into the mindset of doing. Like you're not aiming to hit every top, every bottom. You're not aiming to catch the start of every trending move. You're not looking to, short every single breakdown. You just try and make, the best decisions that you can make given the information that you currently have that makes sense to you, right? And if that's a different opinion than mine, more power to you. If it makes sense to you and it works for you, you should take whatever trade your analysis says to take. And for me, that's a long. Again, my short condition is if, say we trade back below the 33K lows and then retest like 34K and price stalls on that area. And you can check for price stalling on lower time frames. So if you're trading the daily, maybe you can look at like the hourly or the 4 hour and look for early signs of rejection or price stalling, and then make an educated assessment of how price is going to react on the daily, right? Because the daily is just 24 hourly candles, 6 4 hour candles, 2 12 hour candles, so forth, so forth, so forth. So if you see rejection on the hourly, the 2 hour, the 4 hour, the 6 hour, the 10 hour, whatever fucking candle time frame you use, you're probably safe to assume that, hey, the daily is probably going to reject too. Okay. So when you look at that, those are your, like the areas that you've marked out to trade, right? And then from then it's just you being patient, right? So if you entered at 35,000, whatever. Now it's time to sit in your hands, be patient until either you're wrong or until price hits your target, right? Too many people are afraid to do shit right here because they've been getting their asses kicked all month. So then they'll buy like right here or some shit, like 37,000. And then they'll hope for a trending move because 37,000 to 38,000 is like a 3% move. And that you're not making much money from there. Maybe you want to, you're not going to change your life, whatever. So you hold on to it and you pray for the trending move so that you can stack more money. Not a good idea. Okay. So range bound conditions have range bound targets, right? Like, an example of this that I always do, background, I'm a boxer. So if you look at boxing, right, people are very aware of the market or of the match conditions, right? And this is a metaphor for the market, I guess. But you'll know right away, like, okay, what's your win condition, right? Are you just going to outpace him? Maybe you have better conditioning. Maybe you're really strong, so you're going to knock him out. Maybe you're a better fighter in general and you're just going to outclass him. But whatever, like you enter that strategy or that match with, the strategy that you employ, follow that all the way through. Like don't be switching your strategies midway, right? Just because, oh, now that we're at 40K, I'm suddenly gonna aim for a trending move and I'm gonna switch my targets to 70,000. Okay. No, like stick to your strategy. If it breaks above 41K or 40K and you get a retest, more power to you. You have a much higher probability trade. Think of it as like you're paying insurance, right? Like, yeah, you're paying a little bit of a premium. You gave up a little bit of your potential profits because you had to buy back in a little bit higher. But guess what? You avoid the headaches of being the guy that bought 40K and then it dumped to 34, and then you bought 39K and then it dumped to 31. Or you could avoid the deviation right here where maybe you bought 41.2K because you're trigger happy, and now we're at 33K. So if that's the case, like you need to just keep your strategy the same, right? And so that's my strategy for this. If we break above this, then more power to you. But yeah, that's basically my take on the current Bitcoin price action, what I think will happen in a couple days. And funding is negative right now for anyone who follows funding. Like
Yeah.
that's
Funding
actually,
negative, near the range lows, daily SFP into support, right? Doesn't mean
it.
you have to long 125x right now, which a bunch of people in the chat are saying, but you can be long bias. What does that mean? Go to your execution time frame and look for your long triggers, look for your long setups. Someone wanted to ask Loma, when you're talking about on the low
The
time
chat
frame.
is so fucking funny,
I
dude.
know, I know. The chat is hilarious. First of all, I'm not fighting Loma. He just said he's a boxer. It's like, are you kidding me? I might look like I might be a good
Oh.
boxer, but I've lost most of the fights I've been in.
Uh,
What do you look for, Loma, low time frame,
yeah,
to see if price is rejecting or respecting a level? You mentioned like, okay, if we come down here and price looks like it's failing to show me what I want on the lower time frame. Can you give us an example of that?
yeah. So,
How did
for
you do
example,
that? Get rid of all your drawings like that?
you just go here and just so right click the
Oh my god, I'm
type,
still learning how to use TradingView.
like remove drawings. Yeah,
I
yeah.
just pressed the back button like 80 times until they all go away.
Dude, that's so fucking boomer, bro.
I know.
Yeah. So let's say actually let me go in the daily so I can remark out some supports and whatnot. Let's okay, resistance. Let's call this support. Okay. All right. So when you're looking at like a, for example, so we drew this was resistance, right? So you're seeing price as it reaches this area, it just kind of stalls, right? Like there's a push up and then it just nukes down, and then there's a push up and it just nukes down, and then there's a push up and it just nukes down. And that pretty much tells you like, all right, well, it does not seem like the market is ready to move up and above this resistance, right? And this is on like a 15-minute time frame, but uh same idea kind of here, right? Where like prices at support, but there's no real bounce. Like it's just kind of drifting, right? Like we're close enough to support, but it's just kind of low, and like there's no significant bounce that tells you, all right, that must have been a bottom, right? Um, and obviously, like, I'm gonna eyeball, or actually I don't have to eyeball. Let me see. Right? Same with the mid range, right? So if we have the mid range right here, you can tell like price reaches the mid range and it just kind of like there's no real bounce at what should be support, right? So
Mm-hmm.
from the top down, this should provide a bounce, or what a lot of people would take if they're trading the mid range, and suddenly there's no bounce. Like it's a very lackluster bounce, and they're all getting sold into, which should instantly tell you that, all right, the low time frames are looking very weak. And that's what I'm talking about when you see me on Twitter and I'm there, I'm like, yo, Bitcoin looks like shit, or like, uh-oh, or like, oh, this doesn't look good. That's what I'm talking about. Because although you might see like two tweets within like 48 hours that are totally conflicting, where it's like, yo, send that shit up, and damn, this shit does not look good. It usually means like I'm looking on lower time frames, right? So yeah, like when you see stalling like this, like prices quite visibly stalling, like you see every push up gets sold into, right? Support is not doing that thing where it's supposed to support, right? And then obviously, like from here, you see the same thing, and then you see the nuke down. But what's different this time? Like the nuke down instantly gets bought up, right? So this tells me, all right, we're most likely going to see a bounce to maybe up here, maybe like 38K or something, which is this consolidation area right here before the fall. Um, so yeah, like that's how I personally look at lower time frames, and you can extrapolate this to the 5 minute, the 1 minute, the 30 minute, the hourly, whatever, like whatever time frame you're comfortable trading on. It doesn't have to be the 15 minute for anyone who's like just tuning in or just listening to this, but you want to pay attention to the lower time frames, not so that you can make like a definitive decision on your daily chart. Okay. Like that's not what I'm talking about. Like when I'm saying look on lower time frames to get a feel for what price action is hinting at, it isn't the same as saying, yo, I'm going to close out my daily long because the 15-minute chart looks kind of ugly. Right. So,
Yeah, I
um,
talk about this, guys. Like, this is for those of you guys who watch my streams consistently. This is exactly how I trade. It's exactly how I think. I always talk about let price show you that it wants to respect your level, right? You can absolutely just long the first touch of a daily level if that's what you want to do, right? But I like to zoom in on the lower time frame, and I want to see price action show me that it is actually going to respect the level. You want to see at support, are we getting that bounce that I want to see that will eventually translate to a daily time frame move. It will start on the low time frame first, right? The low time frame builds into the high time frame. I want to see that bullish price action get put in. All that kind of stuff. So this is exactly what we talk about on stream, guys, right? Find your levels of interest and then zoom in and say, okay, is price doing, like if you have a support level where you're like, I want to buy here, and then you zoom in and price is just making lower lows and lower highs and every bounce is rejecting hard, that level's probably going to fail. That's exactly what Lomah is showing here, right?
right. Yeah. So like when you're looking at things like this, right, you're not like you're essentially looking at it to get a feel for what price action is hinting that it might do. You're not really looking at the 15 minute to make a decision on your monthly trade or your weekly trade, or even like maybe not even the 4 hour, right?
Yeah.
It's just one of those things where you're looking at that to get a hint at what the market is trying to tell you. Like, hey, I look like shit. I feel like shit. I'm probably gonna go down.
Mm-hmm.
Or hey, there's a lot of buying going on and every dip is just getting bought up and you can pretty much move forward with that. But yeah, lower time frames should kind of lead the narrative, but it shouldn't completely change the narrative, right? So if your 15-minute chart is invalidating your daily, there's a very good chance that the market's either super fucked or your analysis is just really wrong.
Yeah.
Yeah.
Yeah. Sometimes your level's not good, guys. I think that's something that people also like. I've done that like plenty of times. I tried to take a long off the mid range like 2 days ago, and I wasn't really monitoring it, and I got stopped out. And if you look at where I had my area of interest to long marked, price just wasn't showing you that that was support. Just because you think a level might be support, it doesn't mean that it is. And the market will tell you, is there demand there? And if there is, you're going to see the clues in price action that that level actually wants to get bought up. People are asking what your day job is. Lomah is a full-time trader and a boxer. So he's knocking people out in the meantime. What else are they asking here? What are the fib levels that he's using? What's the best level learning for fibs? Go watch some of my old streams. I go over this shit all the time. Will Lomah ever
Actually,
show us
you
his
know, really
face?
good question, which which is sorry,
Go
not to cut
ahead.
you, but a really good question someone just asked was like, can you give me an example of good price action? And I get this a lot. Like a lot of people always ask, like, all right, what's a good PA to follow, or like what's good PA to trade? And the thing is, it's there's no such thing as good or bad price action, right? Like it's just everything is price action, right? It's just a chart. There's such things as, and I'm assuming this is what they mean. It's like what's friendly PA, right? Like what's more trading friendly PA. And the truth is, it's that unless it's like some strict cancerous chop where it's just like 1% up, 1% down, 1% up, 1% down for like weeks at a time, pretty much any PA should be friendly to your trading style on different time frames. You just have to know when not to take a trade. Sometimes a PA offers you a lot more opportunities, hence bull market and whatnot. Or sometimes PA will give you like a one trade a week. Like you really don't know. But if you use, just literal basics like support, resistance, managing a trade, looking at weakness and strength objectively, most PA, barring complete utter nonsense chop, is going to be pretty friendly for you. So I hate to like redirect that question, but focus just on learning the fundamentals of like the market and how price operates. And most price actions should be friendly for you, but there is no like good or bad PA.
Yeah, I mean, the way I kind of like, if you're at support, right? I generally on the low time frame want to see the trend start shifting upwards, because if the 5 minute chart, if I'm at a 4 hour support level and the 5 minute chart starts an uptrend, how do you think a 4 hour uptrend begins? It starts with the lower time frame making higher lows and higher highs. So Mayne, should we go and watch your videos back from 2018 or nothing useful? Everything is useful. What kind of question is that? You should watch every video like several times. What are you talking about? Um, so I think what Lomah just explained here, guys, is definitely 100% in line with what I've been talking to you guys about week after week, right? Know where you want to do business, right? Are you looking for a trade in the middle of nowhere, or do you have a reason to be looking for longs, looking for shorts? And then obviously understanding price action is everything, and understanding market structure is everything. And when people ask me what why I don't use indicators or anything like that, if you have or patterns, people are like, oh, do you see an inverted head and shoulders here? Do you see a ascending triangle? To me, all of that is kind of nonsense. Can they work? Sure, but it's all price action and it's all market structure. And when you understand those two things very deeply, and you have thousands of hours of chart time looking at price action at key levels, at key resistance, seeing what a breakout looks like, seeing what failure looks like, you don't need to know if it's an inverted head and shoulders or an ascending triangle or whatever. You just know, hey, here's my level of support, here's what I'm looking for, and then you can figure out a trade that makes sense at that area. And it just takes time. I think one of the biggest issues people have is they don't put in the time. Like, I don't think that 95% of traders fail because they go broke. I think most traders fail because they don't put in enough time to actually get good at it. They start, they don't make money right away, they get discouraged, and they give up. I don't think most traders just blow up and now they're like broke out of money. Obviously, that does happen, but I think it's about chart time. And when you're asking Lomah, what's good PA look like? What's bad PA look like? If I'm wrong, let me know, Lomah, but it's spending hundreds of hours looking at PA when it's at your level. And then you just start to know. It's almost intuitive. Like, you're just like, okay, this is good. I like this. This is what I want to see at the level. And it's almost kind of hard to put into words, but you've just seen it so many times, right?
Yeah, no, that's exactly it. I know a lot of traders who don't even really mark up their charts. They have maybe like three lines and a circle, you know? Just because like when they look at the chart, they know exactly what they want to look for. Because obviously you can always do, some extracurricular analysis, right? Do fucking gymnastics on it, toss like a bunch of rockets and fib lines and Elliott waves and boxes and shit. But what's actually usable, right? Like what's actually gonna inform your decision making. And most of the things that you see on charts are just fucking useless. It's like
Hmm.
the RSI doesn't really do anything for you right now. The like what the fuck is that triangle from 6 months ago relevant for? Like I
My
have no.
biggest pet peeve are diagonals because they're so subjective, right? Like you've got one guy who's got the triangle and he's like, oh, perfect back test. And then you've got the other guy who's got the triangle, but he uses like the candle bodies instead of the wicks. It's like, oh no, we broke back in. And I'm like, I mean, unless you're Loom Dart or Kaleo, because those are the two guys who I see who use diagonals and are just fucking absolute snipers.
But
Uh,
you notice that they only use diagonals. The
yes,
people who fucking draw diagonals from like 8 months ago, they also have like rectangles and like silly lines drawn everywhere and shapes on every fucking move. And it's like, Jesus Christ, dude. Like, how do you form any fucking analysis from there?
yeah.
Like, it's just a bunch of just like it looks like a Willy Wonka's chocolate factory in there. It's just like, what the fuck is going on?
How's it actionable, right? When you have so much noise. And that's why I talk about indicators too. Like I know some traders, like Cold Blood Schiller, I love, and he uses RSI like an absolute beast, right? But he also has a very deep understanding of price action and of market structure. So it's not just RSI is oversold, I'm buying. It's RSI is oversold, we're putting in a divergence, and we have price action, showing me whatever at the level. And the problem I see with a lot of new traders is they have so much shit going on their charts. I'm like, how do you make a decision with all of this shit? You've got all of this stuff going on. How do you actually say, okay, this is where I'm going to long and this is where I'm wrong and this is where I'm right when you have all of these indicators and lines pointing? Because you can always find a diagonal to fit your bias. Like, always. There's always a trend line that's like, okay, well, this trend line now makes sense. And then if it doesn't, you just adjust it a little bit. Those are the charts I find the funniest where their trend line is just slowly moving and changing slope just to fit the new low that it's made because it failed.
Yeah,
So,
exactly. Yeah.
so I got to take a quick pee. I'll let you keep talking here for a second, and then not to go on too long. I have a few questions I want to ask you, and we can take a couple questions from the chat, and then we can kind of call it a day here. So I'll be right back, but feel free to
Go
keep
for it.
yelling at them. I yell more than you. You're very calm.
Oh yeah, dude. I'm taking over right now. All right.
Oh God, it's me again.
You gonna go piss?
Yeah, it's all you.
All right, got it. All right, everybody. So my Twitter is Lomah crypto. Okay, I'm gonna need everybody to follow. What else? Uh, let's see. What else can I plug? Fuck, dude, I don't have enough shit to plug. Um, yeah, okay. I guess that's it. But I assume if you're following me, and we're probably like already following me. But so if you're looking at this, uh, I mean, I already said enough for Bitcoin. Let's look at Ethereum real quick. Let's hope Mayne takes a long piss. I'm gonna clear everything. Sorry. Oh, shit. I don't want to erase this. This was from whatever. All right, cool. So, all right. Well, we'll talk about Ethereum so that he doesn't fucking yell at me when he comes back from his piss. All right. So Ethereum, pretty much, it's bouncing where it should, right? So you're looking at Ethereum and it's not, I mean, it's not the best chart in the world, right? But if you're trading Ethereum, uh, honestly, you're buying the lows, right? It's the same idea for Bitcoin where you shouldn't really be looking for shorts right here, and you would ultimately be looking for shorts if we lost this level and maybe gave like some type of throwback into resistance, right? So something like that. Um, but yeah, ideally you should be flipping long here. Like you should be looking for longs because the R&R of a long is a lot better than a short. Like I don't even know where you would put your stop loss for the short, right? Like the stop loss would just not make sense. So yeah, I'm gonna go ahead and answer some questions too, because I feel like I don't know, there's a lot of questions in the chat. The video is a little delayed, so I'm looking at the chat right now through YouTube. So um, let me see. Yeah, so I answered one question, which was pull up the ETH chart. That's the ETH chart. I try to break it down as simple as I can. Um, Loma, do you ever look at total? What the fuck is that? Oh, you mean like a total market cap? Uh, I do, but I don't use it in my analysis because I don't know how the total. When he says total, he's talking about like this, like the crypto cap. It's just hard because I don't know how they calculate this, right? Like, is everything in the market cap? You know, is it even calculated properly? Are they using the right numbers, stuff like that? So it's like when I see shit like that, like it's nice to have, I guess, but it doesn't tell me much because the information isn't very reliable, right? So yeah, I don't really use total too much. It's one of those things that it's nice to have, but it's not very actionable. What else?
All right,
So,
I'm back.
he's back. All right, guys, stop talking shit about him.
All I know is he probably shilled his Twitter, probably shilled his fucking YouTube. He's trying to take all my followers. Um, so if you're in the middle of something, feel free to finish. Sorry.
No, I'm basically just answering questions in
So
the
I have a couple questions that I want to ask, and I think these will benefit a lot of people because for those of you that don't know, Loma is a full time trader. He's been doing this for years now. He's very successful. He's done very well. So I think people would benefit from hearing some of these questions. They could be kind of basic, but I'm sure there'll be some interesting answers and stuff that people can kind of action, because I think a lot of the people that watch these videos, as soon as I came back, the viewers just dropped 40. Let's go. Will benefit because a lot of people are new. Obviously, I know there's some seasoned people who watch my stuff, but I do think there's a lot of people who are new. Maybe you joined the market in the last few months and you're trying to make sense of it. I mean, if you joined a year ago, hopefully you made some money. If you joined the last few months, welcome to the community. It could be a long ride. So going back to when you started, what is one thing or a couple things that now that you know them now, you wish you would have avoided early on in your trading career, whether it was using indicators, whatever it may be?
Ooh, that's actually a really good question. And the main thing, the biggest thing actually, is not realizing that as a full-time trader, you don't make money linearly. And what I mean by that is that you know how like say you go to a like your McDonald's job or some shit, right? Like you're getting paid, 11 bucks an hour, 10 bucks an hour, right? And you fully expect to make, if you're there for 8 hours, you're gonna make 80 bucks, right? You're making 80 bucks that day. You're you're guaranteed to make 80 bucks. And the biggest thing with trading was that you don't make money that way. There are days where you just will not make a dime. You might even lose money, but the bulk of your money comes in small periods at a time, right? Where the key then would mean that you would have to emphasize proper decision making because you don't know when those opportunities are coming, right? Like you don't know when the market is gonna suddenly spring to life and you're making six figures every other day, right? Like you don't know. So you have to emphasize survivability, right? You have to emphasize rational decision making. You have to emphasize risk management, right? Which is part of surviving, I guess. And those are things that, are always preached about and people always talk about it, right? But people don't understand why it's important. And that's why it's important. It's not because, if you survive, you're guaranteed to make it. It's that, well, if you're making your money in small bursts at a time, then you got to be alive for the burst, right? But if you're making money every single day, like you would at McDonald's, then it doesn't matter really if you worked 3 days and those days are Monday, Wednesday, Friday versus, Monday, Tuesday, Wednesday or something, right? Because in trading, maybe the hot day is on Friday and you didn't work that day because you fucking didn't survive. Okay, then you're fucked. Like you lost your money making opportunity for that day. So that's a big thing that I wish I learned early, because it also emphasizes that you have to be patient, right? Because you'll know that, hey, today might not be the day where I make a lot of money. The market conditions just aren't very, fine tuned to my trading style, whatever, blah 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 blah. Maybe there's no volatility, um, but yeah, so just from understanding that, you learn all these other things that people preach, right? Which is like patience, surviving, blah blah blah, risk management. So yeah,
Yeah.
that's one thing I really wish I knew. But I always just expected to make money because I came in a bear market, or a bull market, sorry. So I was making money consistently every single day, and I was like, what the fuck, dude? Like I buy Icon, I make money. I buy Tron, I make money. I buy Walton Chain, I make money. I buy fucking Dent, I make money. It's like, holy shit. I buy anything, I make money. Um, until that wasn't the case. And then you had to learn, the cruel reality that there's no such thing as like, a free dollar or free whatever, where the fuck you're from.
Mm-hmm.
There's no such thing as free money. Like eventually, you know, you're gonna lose it if you keep trading the way you do. So yeah, that's probably my biggest tip for complete beginners.
Yeah, I completely agree. And I think it's something, again, right? Everyone's a genius in a bull market. Everyone looks smart because all you have to do is long. Like to lose money in any market over the last year, essentially, until we had the top, um, was really, really hard, right? Like, unless you were shorting the entire way up, like all you had to do was long. Um, and I think a lot of people misinterpret being in the market at the right time and actual skill. And what you learn when you learn how to trade is exactly what Loma said, right? There are certain conditions when you're like, okay, this is when I need to step on the gas because this is when I'm going to make the bulk of my money. I'm trading within this range, guys. I'm trading with not even half the size that I was trading with 6 months ago when we were in a very obvious uptrend because I'm not as confident. I don't have the high level of conviction on these setups. It doesn't mean I think I'm going to be wrong, but I don't think that these are going to be longs that I can hold for days, weeks, maybe even months because of the market conditions. The time to make a bunch of money in the bull run is past. Maybe we have another leg past all-time high. I hope we do. But that's a perfect explanation, right? You're going to make money in bunches. Learning when to identify those times and to step on the gas, and that's the time where you stay up late, you're on the low time frame, you're taking multiple positions, you're trading alts and Bitcoin because the market conditions are like, hey, now's the time to make hay. There's so many analogies you can make, right? Like you can treat it like farming, you can treat it like poker, right? Like if you're playing poker, pro poker players fold so many hands, right? That's how you know the difference between a pro and an amateur, right? A pro poker player, if they don't get that, and they've only seen two cards, they haven't seen the flop, anything, they fold so many hands. And then when they get that hand that they're like, this is the one where I have a chance to, make some real cash, that's when they push. That's when they start betting. That's when they start, trying to get a big pot. Because they know that the odds and all of the conditions are now stacked in their favor, right? Same thing with like being like a farmer, right? Like you have parts of the year where your crops are growing and you're selling them, then you're making money. And then what are you doing the rest of the year? You're preparing yourself for the part of the year where you make all of your money, the part of the season. And if we're going into a bear market, guys, this is the perfect time to fucking sow your oats, right? Prepare your field for the harvest. This is the perfect time to be folding your cards away until you get that hand where you're like, okay, now we're entering an environment or entering a hand where I want to press the gas. This is the time when you're going to learn. I did my best learning on trading in 2014 through 2016 because we were in a bear market, price was going down, and I was like, I need to actually learn what the fuck I'm doing. So when 2017 came around, I was able to capitalize. And a lot of you that joined recently, let's assume we're going into a bear market. That's okay, right? Take the lessons that you've learned. Hopefully you have some money left, and and practice and sharpen those tools. So when the conditions get right, that's when you're making money hand over fist. And then know when not to trade as well. But yeah, money is not linear at all in this game. It's easy to be like, okay, if I spend 5 hours on the screen, I'm gonna make money. That's not the case. There might be a 5 hour period where you make 100 grand. There might be a 5 hour period where you don't take a single trade. Um,
Yeah.
so that's awesome. Another question for you. Um, Now that you've been doing this for several years now, you're obviously very successful at trading. Over time, I find that a lot of people they don't have the right they don't focus on the right things in terms of their learning process. So like when you were learning, what was like kind of the, I guess, the moment where it clicked for you? Not necessarily where you became profitable, but where you're like, okay, like this is the skill, this is the type of trading, or whatever it was to master. And I'll give you my example if that helps you answer it, where you're like, okay, now things are starting to make sense, things are starting to progress. For me, when I first joined, I joined in a bull market way back in the day, so I was making a bunch of money. Then shit started dropping. I didn't know how to trade, so I lost it all. I messed around with a lot of indicators. I messed around with a lot of different shit. And as soon as I found price action, that was the style that spoke to me, where I was like, okay, I'm actually starting to clue in. Like when I'm looking at the chart, I actually now kind of know what I'm looking for. I wasn't profitable instantly, but I was like, okay, now I have something that I that resonates with me in terms of how to trade, and I feel like I started to be able to actually read the market a little bit and make predictions that ended up working out. So for you in your trading journey, like was it discovering price action that made it click for you? Was it, just spending time in the charts? Like what was kind of the thing that got you over the hurdle where you're like, oh, I actually kind of feel like I know what I'm doing?
That's a really good question. So mine actually started by accident, man. I was actually so I was like, like I wanted to become a better trader, don't get me wrong. So I took the natural progression of things, right? As in, you go on YouTube or you go on Google and you search like, trading tips or whatever the fuck like you're interested in. And obviously you'll start and you'll learn about like bull flags and shapes and head and shoulders and inverse head and shoulders and stuff like that, right? And that's why you see most people who are new to trading, their charts are just a bunch of shapes and a lot of indicators because they don't really know what they're looking for, and they're just hoping to get some signal by burying the entire thing in noise, right? And that's kind of how I started. And what really started to click for me was actually when I started to journal. And it sounds really boring, but
Lomah's got a diary.
yeah. But yeah, so basically like when you journal, right, you'll know what setups you take, what setups you hit, what setups don't hit. And you start to get a feel for the things that make you money and the things that lose you money. And then from there, that's when it really started to click for me, where I was like, all right, this time frame is when I make the most money. When I trade, this pattern, it makes the most money for me. And from there, I started completely cutting all my other trades and only took specific setups that were proven to like be favorable for me, and I would learn all about them. And one of them was obviously like a bull flag, right? And like an inverse head and shoulders, right? And then from there you start to learn, all right, what actually is that? Like it can't actually be, someone is painting a fucking like head and shoulders every time, or somebody's trying to just paint a bull flag. Like what is it? No, well, it's a reclaim of support, or it's a rejection from resistance, or it's consolidation after an up move. And that usually just means that the trend continues upwards, right? So things like that, you would learn, you start to understand the concepts of it more than just, like because look at the shape, it looks like a flag, it has to go up, no, it's consolidation. And then what does consolidation look like? And then you just keep going down that rabbit hole, right? And you learn one little concept at a time. You learn to employ it somehow into your trading strategy, and before you know it, you have a fully customized strategy that is proven to be profitable for you, that you know how to, like for example, CBS, right? He uses Renko, he uses divergences, he uses, like very niche things that most people won't use, or most people won't use together, right? And that's and it all works, and that's just how the game works. Like if you're willing to, figure out what works well for you and understand the concepts of it, you're going to do pretty well, right?
Yeah.
You're going to do pretty well. And at the end of the day, you're also going to realize that most analysis points you to the same target. It's just a different way of getting there. It's kind of like you took a different route to get to your favorite restaurant or something. Okay. But yeah, that's probably one thing that's helped me a lot.
Yeah, I talk about this all the time, guys. I don't journal nearly as much as I used to. But when I was learning, you need data. Like, how can you determine if what you're doing is A, profitable, B, if it is consistent in terms of you're looking at the same thing and you're looking for the same setup if you don't have the data, right? Like a bull flag in a downtrend is not going to work, right? A bull flag makes sense because in your data, you're like, okay, well, if we're in an uptrend and then price breaks a key level and then it starts doing the bull flag, I know 9 out of 10 times that leads to continuation or whatever it is. You need the data. And um, the first way to kind of collect that data is to write it down, but then you also have to have static information in there. And what I tell these guys all the time is like, if you're going to do something, do it the same way every time, right? Because if you change the way that you look for that setup or mark that level, your data is now irrelevant, right? The data is only valuable if you have set conditions and environment controls that makes the data repeatable. So now when you look at your data set of your last 100 bull flag setups, you know that the way you analyze that bull flag was the same every time. And if it worked 70 out of 100 times, that's something interesting. That's something worth pursuing. Because you're like, okay, this is high hit rate. And unfortunately, I think a lot of people join in the bull run and they see people flashing huge P&Ls and going, haha, draw the line, drew a magnet. And I love Rookie. This is not a shot at Rookie by any means. And price went there. I think they discount how professional people take things behind the scene. You just don't see it on Twitter because no one gives a shit, right? No one wants to see the extensive write-up that you did on your setup that ended up working out. They just want to see the P&L or the sick entry that you got. And if you're going to do this full time and if you're going to take this seriously, you need to do things like all the best traders I know journal. Maybe not, I definitely don't journal like I used to. I used to go crazy, but I still track all of my trades, and there's tons of software that can help you do this as well, guys, that makes it super easy and intuitive. But you have to have that data. And the only way to do that is to put in the time. It's not the glamorous part of trading. I think that's another thing, right? Is people see the first class picture, right? Oh, I'm on first class. I got the Rolex. I'm driving the sick car. They don't see all the shit that was behind that and all the years where you were journaling shit that wasn't working. And you're like, why the hell isn't it? But without writing it down, you don't know. How do you know what you need to fix, what you need to tweak if you haven't got any sort of backlog of information? Do you use any sort of specific, do you use Edgewonk? Do you just use an Excel sheet, anything like that? Or do you write it out by hand?
I use Edgewonk, but I initially started with Excel. So either or works. I recommend Excel, to be honest, because it's more customizable.
Yeah.
You can add certain features to it, like what you're specifically looking for. Like say if you're like, trading off volume or something, you can check like, did volume, match this move or something like that, or was it like a low volume move, but you got the end result that you wanted anyway, or whatever.
Yeah.
So I personally would recommend anyone to use Excel just because it's free. I
Yeah.
mean, well, I guess, you can use Google Sheets too, I guess.
I used to use Discord. I had a private
Yes.
Discord that was just me in it, and I would just post I would screenshot my trading view, the before, the after, all of the notes, all of the shit in between, and I could just scroll. And then I had this endless thing. I used Edgewonk for a while, but I found that there's a lot of stuff in there that just like wasn't relevant to like what I was doing. And it's also about simplicity, guys. Like I tell these guys, I have like 4 setups that I use, and that's it. That's
Yeah.
it. And there's other ones where I know that this is like might be a long, but it's not my exact setup. I'm not taking it. And that level of kind of discipline is can be super hard. Okay, I got a couple more questions for you here, and then we can wrap it up as the weekly closes.
Perfect.
So, where did you, where would you say your best learning resource was? Was it paid groups? Was it free YouTube videos? Was it just straight up chart time, trial and error?
It was getting my ass fucking handed to me by the market day after day after day after day, right? And then if you wanted to, survive and make a living off the market, you would clearly have to adapt because at a certain point, you just gotta, look at the results and just look at yourself in the face and be like, all right, well, clearly what I think is right isn't right. And what I'm doing probably isn't the right thing, right? And that just goes back to being really honest and unbiased in your assessment of your trading, right? Because everybody wants to be, the big dick baller with Rolexes and penthouses and yachts and all that, right? But your trading at the end of the day is what brings all of that together. And if your trading sucks ass, like you got to figure that shit out. And for me, that's what my goal was, right? And I got desperate enough to fucking make a journal because trust me, I'm not a journaling kind of guy. Like I don't like doing it. I think it's really annoying and it takes a lot of time. But I saw all these other traders that apparently knew what the fuck they were doing, and they would always say, hey, make sure you journal, right? Like make sure you know your edge in the market because if you don't know what you're good at, the market will literally just punish you at what you're bad at, right? Like if you're not doing things that are good for you, well, guess what? Like somebody else is doing the things that are, good for them or that they have an advantage in. And it usually involves taking your money, right? Because it's a zero sum game at the end of the day. It might not be zero sum in a limited environment like CT, where like if I win, doesn't necessarily have to mean you lose, but somebody out there is probably losing. Okay. Um, so yeah, that's probably the best way that I learned trial and error. But that only works if you're really honest with yourself and you have a fair assessment of your trading. Because some people are fucking delusional. Like I swear to God, some people are the shittiest traders I've ever met in their lives, and they're like, "Oh, dude, I do everything right, but this market is manipulated," or I just it just seems like the exchanges are trading against me and the data is wrong or like swing failure patterns don't work or order blocks are scams, whatever, right? And it's like, well, I don't know what to tell you, man. Like you just need a better assessment on your abilities. But
Yeah.
yeah,
It's the victim mentality, right? Like it can't be me. The market is wrong. Or oh, my level was good, but like price just got nuked because of this news event, and that's why.
yes,
Um,
fuck Elon Musk. This
yeah,
guy's a
and
terrible dude.
it's totally fun to meme on Twitter and be like, oh, Elon tweeted, therefore this happened. To me, everything is in the charts. And one thing that you brought up that I think is huge is like trading is a single player game at the end of the day. Like as much as you have friends on Twitter and whatever, like it's you in the chart, it's you and your P&L, and it is people look at trading as easy because you can make a bunch of money and they're like, oh, all they do is go on their computer and press a few buttons. Like to me, it is the hardest job I've ever had because you have to be, there's no one to blame but you. It's not like you're working at some job at McDonald's and you took, or you're a server and you took the order down right and then you brought out the food but the kitchen fucked it up. Like that's not your fault, right? Like trading, everything that goes wrong is your fault and everything that goes right is also because of you. And it takes a massive, I think, kind of like ego check to be able to look at your P&L, look at what you're doing and realize every decision you made, you press the button. No matter if someone on Twitter told you to press it or Mayne said to long and then it dropped, therefore you press the button. And you have to have the ability to be introspective and look at yourself critically, which is very hard for some people because people have huge egos and whatever. You have to be able to look at yourself critically. And a great way to do that is to journal and write shit down and be like, okay, well, why didn't this work out? Well, I look at my journal. It's like, well, here's my trade conditions. I skipped 3 of them. I'm looking to long at the range high, whatever it is.
Exactly.
And I think that that's really difficult for some people to do, is to have that ability to be like, okay, what the fuck am I doing wrong? And how can I fix that? And journaling is a great way to, identify these things, because now you have it in front of you. It's very easy to like take a trade, completely forget about it because it didn't work out. But if you have the data and you look back, now you have something to build on. So last two questions here, they'll be quick. Crypto
Yeah.
Twitter, net positive or net negative on your trading?
Depends what stage in your trading career you're at. For me right now, net positive. If I was just beginning, um, depending on when you join too, probably, man, it's hard. Okay, if you like to just copy trade ideas and not learn from them, crypto Twitter is going to be a net negative for you,
Mm-hmm.
because you're going to copy a lot of different people with conflicting ideas, with different forms of analysis, trading on different time frames, and you're going to end up confused and bitter about the entire space, because you're going to think, Loomdart lost me money. Cred is a piece of shit,
He is, but
CBS.
that's besides the
CBS
point.
doesn't work. Oh, dude, yeah, dude, fuck that guy. Yeah,
He's
you're
so
right.
he's so mean.
He's so mean, bro. He corrects my grammar every
It's
fucking other
annoying. It's like, yeah, I get it. I'm dyslexic.
time. But if you're at a trading point in your career where it's like you understand the market, you're doing well for yourself, or you have, even a decent grasp of the market, yeah, it's a net positive, right? Because like you have people to share ideas with, to be able to, really learn with, because you guys are all, roughly looking at similar things and you have different opinions maybe. But yeah, like if you're new, I would recommend learning how to trade first before you get on crypto Twitter. But crypto Twitter is a great place for information.
Yeah,
Okay, it's not a place for you to copy trades.
yeah,
Like I know that's what most people do when they get on, and that's why when Rookie tweets or Kaleo tweets, price goes up like 5%, right?
yeah.
Um, that's not how it should be used. But that's like saying, knives should only be used for the kitchen, yet people are getting stabbed every day, right? So, um, yeah, that's my take on it. I mean, right now, net positive, you need some laughs, you need some people to, learn from, or, exchange ideas with. And being a trader, especially like an anonymous one in a 24/7 market that nobody else in your life probably understands, it's nice to have people that you can talk to, right? It's
Yeah.
nice to have people that you can that understands you, right? That's like, ah, oh, fuck, bro, I also got liquidated, or like, oh man, I also got caught on that move down, or I also made money, right? And being able to share those experiences with people help keep you sane in a game that is pretty much driven most people to like the fucking cliff. Okay, so yeah, net positive for me, but depends on where you're at in your trading career.
I completely agree. I mean, I think you got to know what Twitter is for. When you're learning, and I tell this to all new people, I'm like, stay off of Twitter, right? Because you might be like, okay, I'm long because of X, Y, and Z, and then you see that Loma posted a short, and now you're like, well, what the hell, right? Loma's a good trader, and he's short, and I'm long, right? Well, first of all, both of you can be right. You don't know what Loma's conditions for being short are. You don't know where his stop is. You don't know his thought process, but you're gonna have all of these biases from people with lots of followers, people you might think are good traders, that are then going to fuck up you. So when you go look at the chart, you already have in your mind that Loma and Mayne are short. So you're going to ignore anything that might be telling you to long based on your system. So when you're learning, I think stay off of Twitter. I'm not saying don't have an account or anything like that. I completely agree. There is some great, I mean, Cred has an entire technical analysis course on Twitter completely free, like from not understanding anything to like actually executing trades and using risk management. There are great people on Twitter, there's great resources, but just know what you're going on there for. If you want to go on there to communicate with people, it's a great place to make friends, and like Loma said, find like-minded people who know what you're dealing with and you can commiserate with, because no one else in your life understands. Absolutely. But if you're going on Twitter just expecting people to tell you what to do, like, it is a recipe for failure. It might work for a while when everything is going up and, oh, this guy told me to long and it worked, and then he told me to long and it worked again. It's like, well, yeah, that's because the whole market did a 3,000% to the upside. So of course it worked. but don't go on there to copy trade people, right? Like it can be an incredible resource for learning, for making friends and connections, but it also, I think, can be very negative, especially if you're new, because you are gonna have, like, for me, if I go on Twitter and I see someone in the opposite trade idea for me, it doesn't affect me at all because I know my system, I know what I'm looking for. If you're still in that learning stage, those other people's opinions are gonna affect yours negatively, whether you like to think it or not. If you saw that, all these traders that you respect are bearish and you're like, but I want a long here, you might not do it, even though what if we're wrong and you were right? So completely agree. I think that was a great answer. Last question here. Poirier versus McGregor, round 3, July 10th or 12th. Who do you got?
Oh, oh man, that's hard. That's really hard,
I got
man.
McGregor just because I'm a fanboy, but he did lose pretty handily. I do think, though, in the last fight, like, I feel like McGregor was winning.
Until the leg
Yeah,
kicks.
and then the leg kick started wearing him down, and then Poirier just caught him and pieced him up.
Yeah, man, McGregor, I would say, is the overall better fighter. If the leg kicks don't happen, I think McGregor just, either knocks him out or just like wins like the entire fight, just round after round after round. Because I don't think Dustin's touching his boxing.
Yeah.
So if I gun to my head and you made me pick, I would say McGregor. Because there's only one thing he needs to really address, and that's the leg kicks, which I'm sure he's aware of because if like he's acknowledged that he lost because of leg kicks. So
Yeah.
and I like McGregor, like I like his story, from nothing to something, from like a kid on the dole to being one of the most paid athletes in the world. So
Yeah,
yeah.
I think McGregor's an absolute monster. I love watching him fight, and I think he's great for the sport just because of how he, the shit talking, the swag. It's like Muhammad Ali reincarnate, man. Like people don't seem to like, obviously we're all young. Like Muhammad Ali was fighting well before we were even born. But my dad is big into boxing, and he used to make me watch all of these old Ali fights and pressers and shit that you can find on YouTube. And like it's not as brash as McGregor is, obviously, because we're in a different day and age. But like people, like you would almost think Ali was undefeated on how he talks, right?
Yep.
Like just like McGregor. McGregor's lost lots of fights, but it doesn't seem to like affect him negatively like it might some other traders because like he says he's the best and you believe him. And that was Ali as well. Ali would just like he would tell you, he's like, I'm the greatest. Like, and it doesn't even matter if I've lost fight, if I lost my last fight, like I'm the greatest and I'm gonna fucking destroy you. And the vibe from McGregor, I want him to win. I would like him to, have not his last loss be or last fight be a loss. But you look at like the Floyd Mayweather fight versus him, like he lost and he still came out on top. So I absolutely love McGregor. I'd pick McGregor as well. Daily close, guys, and we'll end it here. So we closed under the mid range. However, we did have a pretty nice candle. My bias going into the week is probably to look for longs unless we lose this current low.
That's a great take. Yep. I agree with that daily as well.
So, all right, Loma, thanks so much, man. This was a ton of fun. I hope you guys enjoyed this. This is definitely going to be one to rewatch several times to pump up my YouTube numbers and for the valuable information. But this was fun, dude. We'll have to do it again sometime.
Yeah, thanks for having me, guys. Thanks for watching, and I'll catch you guys next time.
I'll leave all of Loma's stuff, guys, in the description of the video, his Twitter, his YouTube. So if you got any questions, you can check that out. And I'll sign off. All right, Loma. See you later, man.
All right, peace out, man.
All right, guys. Thank you so much for tuning in. This is another episode of Ethereum Chill with Trader Mayne. So yeah, we had like 700 viewers the entire video, which is awesome. So hopefully you guys enjoyed this one. I think there's a lot. I know we didn't talk too much about the current state of the market. We're going sideways. We've been going sideways for a month. We are near the range lows. We've had a reaction near the range lows. Let's see if we can get some follow through from the bulls. If we get back below this low, right? If we get back below this low, that probably invalidates long bias. But if we can maintain above this low, I like to look for longs this week because I did not long this personally. And yeah, if you got any questions, you guys know you can hit me up on Twitter. Join my Discord. It's completely free. Link is in the bio of my Twitter. You click on my yacht. It's got all of my socials in there. And I'll be back for another video probably on Tuesday or Wednesday. All right, guys.